All right, guys. Yesterday, we looked at question number 1, which was focusing on absorption costing and marginal costing. And we saw that the two main differences between the two, or the main difference actually is on the calculation of the closing inventory, the value of the closing inventory. Under absorption costing, you have to include all the costs that have been incurred in producing a product, including the fixed cost, fixed manufacturing cost, and then variable manufacturing cost. So under absorption cost, we are looking at all the costs that has been absorbed in a product. If you look at this cup, all the costs that has been absorbed in the production of this cup, that means there has been a rent that has been paid on a building, there has been a salary that has been paid to a manager, but those are fixed manufacturing costs, plus the variable costs, which include the labor of the person that was involved in the production of this cup, plus the material to build this cup, to mold this cup, that is variable manufacturing cost. So in absorption costing, you are including both the fixed component, the rent of the factory, the electricity, maybe that the fixed bill of electricity, that is for that manufacturing building, plus all the other direct labor and direct material. They are brought together to help us to calculate what you call the value of closing inventory, that is under absorption costing. Please mute your mics. Please mute your mics. At this time, it's me who is speaking. Then under marginal costing, we are only taking into cognizance, we are only recognizing the variable cost. The variable costs, which include the material that has been brought to build this cup and the labor that was directly involved in building this cup. It is the one that we use to calculate the value of inventory at the end of the year. That is the main differences between the two methods. Under absorption costing, that is our traditional profit and loss, or the traditional income statement. That is absorption costing. Then marginal costing, the first thing that you need to do is calculate what you call marginal income, which is your sales minus variable cost. After you've deducted your variable cost from your sales, you get your marginal income. From your marginal income, you subtract your fixed cost, then you get your net profit. All right, so far so good about yesterday. Today we've got another question. It's actually, this question is in two parts. The first question is on labor, then the second question is on inventory. All right. Please mute your mics. Dabi Singh, please mute your mic. Okay. So the question goes, calculate the daily remuneration of Wayne Rooney. Those that don't know Wayne Rooney was a former Manchester United player. I think he transferred to, I don't know now. Those who know, you can tell us. I think he went to West Ham. From West Ham, maybe he went to America, I don't know. Or maybe he's coaching now. Where is he? Those who know soccer. No one knows. Okay, let me see. There's a message here. All right. No, it's not about Wayne Rooney. So it's calculate the daily remuneration of Wayne Rooney using Taylor's differential piecework system from the information provided. The following information relates to Wayne Rooney, an employee of Manchester Enterprises. This person is setting this question in 2021, but I don't think Wayne Rooney is still an employee of Manchester. All right, Wayne Rooney's standard work day is 9 hours. His standard production is 55 units per day, per hour. His normal wage rate is 73 Rand per hour. He is remunerated in terms of Taylor's differential piecework system, whereby the following premiums applies. Premium applies 80% of piecework rate if below standard, 120% of piecework rate if standard or above standard. When Rooney production is 300 units per day, use the information provided below to calculate the following. All right, they are saying, all right, the question ends here. Everyone should have the question paper. So when we say Taylor's differential piecework is, you are remunerated according to your production, the number of units that you are producing at the end of the day. So if you are remunerated according to that, I want to change the screen that I'm sharing and then start sharing this. Can you now see the Excel? Can you see the Excel now?
Yes, we can.
All right, question number 1. So when you say differential piecework, we are saying those that can produce 300 units per day cannot be compared to those that produce 500 units per day. It's different. So they have to be remunerated differently. Hence, this system tailors differential piecework. So it's question number 2.1. I'm looking at the question here. Question number 2.1. So the first thing that we need to know when you are doing Taylor differential piecework remuneration system or piecework system. The first thing that you need to calculate is what we call standard rate per unit. Standard rate per unit. This is the first thing that we need to calculate. We want to see how much are you really paying per unit. The standard that you are paying to produce 1 unit, you Manchester Enterprises, what is it? The standard rate per unit. How much are you paying for the production of 1 unit? After we have gotten that standard rate per unit, we multiply it by the number of units that you have produced. After multiplying by the number of units that you have produced, then you apply the premiums. If it's 80, if it's below and above, you compare it with what you have produced. If it's below, you multiply by 80%. If it's above, you multiply by 120%. So the formula to calculate the standard rate per unit is actually hours worked. But I want to show you another shortcut. This is the longer way. Hours worked times rate per hour. Rate per hour. Then this one over standard units. Standard units. Sorry, guys. Okay. Standard units expected to be produced. Remember this one. Let me do this so that it's under that one. So it's actually, let me put the top border. So it's actually standard rate per unit is equals to hours worked times the rate per hour over standard units to be produced. Right. So this one I want to call it standard rate. Standard rate per unit is equals to, let's look at the numerator, hours worked. How many hours are being worked per day? It's 9 hours. Then the rate per hour is 73. Then we have to divide it by standard units expected to be produced. So if the day has got 9 hours, so, and we are producing how many units per day, per hour? We are producing 55. It therefore means the standard units to be produced per day is equivalent to 55 times 9. If you can see 9 and 9, they cancel each other there. Right. Let's do our mathematics. Here is equals to 73 times 9. Gives you 657. Then there is equals to 55 times 9. Gives you what? 495. Let's divide that. What do you get? Standard rate per unit. What do you get? $1, 1 rand. 33. Yes, 133. That is the standard rate per hour. So this is the most important figure that you need to calculate, which is called the standard rate per unit. But as you can see, From what I have read there, you can calculate the standard rate per unit without even employing this formula. You just have to use your logic, because it says here, let me read. I think if I read slowly, you can see what I'm saying. It says here, when Rooney's standard work day is 9 hours, his standard production time is 55 units per hour. So in 1 hour, that is from 7 p.m., right now we are in that hour, from 7 p.m. to 8 p.m., when Rooney is producing 55 units in that hour. And in that hour, when Rooney is being paid 73 units, 73 rand. You get it? So how much is he paid to produce 1 unit? 73 over 55. You get it? So shortcut is what is paid per hour over the number of units that he is, the number of units that he is producing in that hour. You get that?
Yes, we do.
Okay, good. That's logic. Then after you have done that now, you come here and say, when Rooney's remuneration is equals to the units that when Rooney produced how many units? 300 times the standard rate 1.33 times. Is that 1.33 under production or overproduction compared to what he was supposed to produce in a day? In a day, he's supposed to produce 495, but when Rooney only produces 300. So is that under production or overproduction?
Under.
Under production. So you multiply that one by 0.8. What do you get? You multiply that by 0.8 because 80% of piecework rate if it's below standard. So you come
1.06.
300. Let me see. 300.
319 rands 20 cents.
Times 0.8. It's 319.
20 cents.
319 20 cents. Not 20. Like that. Yes, that's Wayne Rooney's remuneration. That's 2.1. Is that clear, guys? And 2.1.
Yep.
Then you get your 5 marks and you go home smiling.
Yeah.
All right. Let me see if there is a message that concerns me.
Maybe you can explain that 0.8 again, man. How do you get it? I know that it's under production, but I didn't know how to calculate it to get that 0.8. Which formula?
All right. May I know who's speaking?
Do me.
Okay, I do me. Right. Do me, I definitely know how to explain that 0.8, but I want someone among the students to tell me how do we get 0.8, because it might not be Dumi only who doesn't know how we got 0.8. Someone who knows where we got that.
Divide by 100.
That's 80%.
80 divided by 100.
Okay.
Yes, Dumi. If you look at point number 3. If you look at point number 3.
Oh, okay. So the 80%. Okay.
Yeah.
All
so
right.
80% is 0.8.
0.8, yes. Yeah.
Yeah.
Okay. Thank you very much.
If we're going to use 120%, we're going to write 1.2.
Yes.
Yes. Okay, good. Let's go to 2.2. It says, use the following, the information provided below to calculate the following. Right. The following is the economic order quantity, calculate the number of orders that need to be placed for the year. All right. Let me just give you what do I call it? Let me just give you a bit of theory on this one. I'm trying to pin this one. Okay, so that you can see me. Am I visible, guys?
Yeah.
Okay, ladies, what do you see?
Ring.
I thought you were going to say I can see 5 fingers. All right. It was just joking. All right. So when you are talking about management of inventory, if you are employed in a department where you need to manage inventory, remember inventory is the stock that you keep in anticipation of selling it. That is inventory. So there you need to be very, very careful as a non-management accountant, because you can keep too much stock in stores. If you keep too much stock, when there's a deal somewhere that needs cash, your cash is trapped in that stock that you are keeping in the warehouse. Or let's say there is actually an invention of something that is new, a new input that has been invented, that will render all the products that you have in your warehouse obsolete, because they are outdated. Or let's say it rains and there is a leak on the roof. A tsunami, not a tsunami, a hurricane has come and it has destroyed the roof. You are bound to lose if you keep too much stock. That is one side of the coin. The other side of the coin is, if you keep less stock, there are people who are going to come demanding the product that you are selling, and they are going to tell them, we are running out of stock, thereby losing business. So between these two sides that I've explained, you have to be in between. There should be the right timing of placing an order, in which you consider also the lead time that is needed for you to wait for your order. You also need to consider the annual usage. How much do you actually use per year? How much is demanded per year? So how many units do you need to demand to order at each point that you order, and after how many days? That is what we call the economic order quantity. So the economic order quantity is the optimum number of units that you need to order to reduce the cost of storing, and also making sure that you don't lose business. Have I explained that enough to at least make you smile today?
Yes.
All right. So should we go to our question now? Now, as we get to our question, you have the understanding of the background that I have given in your minds, so that when we tackle this question, you will be understanding what you'll be doing. Right. So let me do this. I want to share the screen. We are here. Right. So the question says, monthly sales of West Ham. This person is a soccer fan. He is now talking about West Ham. Monthly sales of West Ham Limited is 4,400 units at 150 a unit. The purchase, but can you see that it's written monthly? Not annual.
Yep.
It's monthly. Then the purchase price is 90 per unit. The carrying amounts, the carrying costs to 10% of the purchase price, and the ordering cost is 62 per order. Right. That is the same information. Then calculate the economic order quantity. So there is a formula that you need to know when you are calculating the economic order quantity. Let me see if I can get it somewhere, and then I can bring it, because here I cannot write the square root. Can I? I know it's under symbols somewhere, but it will be like this. Let me try my tricks here. I want to bring it here. Okay. Right. Yeah. Right. Where are we? Let me come back and put them. Oh, I think I got it. But nada. Forgive me, guys. Just give me some, give me 2 seconds. I'm trying to bring the formula here. No, it's not coming. 2 seconds. I'm trying to bring the formula here. There's someone who is trying to copy image. If it refuses this time, okay, it has refused. I can hear some feedback. What is happening there? If it refuses this time, okay. Someone who has got a television set that is. What is happening there? All right. So the formula is square root. I'll write it in words. Square root. Then square root of. Let me write it in words. Square root of 2 times the carrying cost. Or okay, the cost of placing an order. The cost of placing an order times the annual usage. Annual usage. All these should be in bracket divided by holding costs.
Holding stock.
Holding costs, né? Okay. Or the holding cost of 1 unit. Let me say holding cost per unit. Usually, I use this. Let me just get a Word document. Wait, guys, I want to get a Word document. I hope I'll get it quickly. I want to show you something. I will not be happy if I don't show you that. It was something that will make you remember these things. Let me do this. Oh, let me rather do it like this. Let me share this page. Okay, let me share this page. All right, can you see the formula for the economic order quantity? Is it clear now? Economic order quantity is equals to the square root of 2 times C times U times H. So usually,
Which quantity?
hey guys, there's someone who has got, I can hear, what's happening? We need to mute our mic.
It's Marjorie. Marjorie
please.
Kapala.
We need to mute our mic.
Marjorie Kapala,
please. All right. Yes, it was Marjorie. Okay. So this is the formula for the economic order quantity. I usually do this. I love to see you, honey. I love to see you, honey.
Honey.
Honey, did you hear that? I love to see you, honey. This is the way to memorize the formula. So I'm saying this square root thing is the heart. That's why I'm saying I love 2. So 2 is always there, is a constant. Then C is the cost of placing an order. Then U is the annual usage. Then H is the holding cost per unit. So I love to see you, Annie. Are we together, guys? Can I stop sharing this so that we can now go to calculate it? So what you need to do, you need to calculate the numerator first before you divide by the denominator. And this whole thing that is under the square root has to be calculated before you actually get the square root. Hence the brackets that I have put there. Okay, so I'll stop sharing here and then share my Excel again. Okay, therefore means if I come to my Excel again, it will be 2. What has happened now? Hey, I don't know. Let me see. What are you seeing on the screen?
The Excel. Excel.
The one that we are using.
Yes.
All right. So it will be 2 times the cost of placing an order. What is the cost of placing an order here? The cost of placing an order. Can you see that is 62? Not the carrying amount. It's written there, the purchase price and the ordering cost is 62 per order. Do you see that?
Yes.
Right. Then the annual usage, we are given the monthly usage, which is 4,400. So you need to convert the monthly usage to an annual usage. So you need to multiply by 12. Then denominator there is holding cost, and the holding cost is the same as the carrying cost, which is 10% of the purchase price. The purchase price is 90, so 10% of 90 is 9. Do you see how we got to our 9? Let me do this. Let me say 10% of 90, so that when you revise, you know what you're doing, which is equals to 9. So the denominator there is 9, but let's calculate the numerator, which is equals to 2 multiplied by 62.
Sorry, Jasper, where did we get 12?
All right, I'm coming back there.
Number of them.
Times 12. And then I'm coming there. This one is a 9. All right, where did we get a 12? Someone to answer that question.
You said 4,400.
Why are we multiplying by 12? I think that's the question. That's where the
It's
question is coming.
because
12
it's
is for
because
12 months because it takes 12 months in a year.
Yes, because we had asked the question. I want to address you by name.
Ngwe.
Hi, Ngwe. Chikoni,
Yeah.
today we are very quiet. Are you fine, Chikoni?
Yes, I am, Jasper.
Okay, good. We are given that monthly sales, but our U on the formula, it donates to the annual usage. So we need to change the monthly to annual. I think that's where the trick was. So we need to divide now. Are you answered?
Yes,
All right.
thank you.
So it's 727,467. So is the square root of 727,467. 467. What is the square root? Economic order quantity equals. Let's find the square root. Those are good calculators.
852.9, which is rounded off to 853.
852.9,
2.9,
which is equals to
853.
853 units. Okay, that is our answer. That is the economic order quantity. Okay, so this was 2.2.1. Right. Then 2.2.2.2. 2.2.2 says calculate the number of orders that needs to be placed for the year. This one is very easy. It says the number of orders to be placed in a year. The formula is equals to the annual usage over the economic order quantity. So we are just saying, the question is how many orders you need to place in a year. So you just need to say, let me do this. You just need to say if the economic order quantity is 653, means every time you order, you need to order 653 units. But how many do you need? How many units do you need throughout the year, which is the annual usage? So you say 4,400 times 12 over the economic order quantity. So it's actually 400 times 12. You divide, you first of all calculate that, and then you divide by 853. What is 4,400 divided times 12? 4,400 times 12. Okay, let me do it myself.
52,800.
Okay, let me see. 52,800. So it's 52,800 divided by 853. So number of orders. Number of orders equals. So here we put 853. Then we divide. Equals this one divided by that. It's 62 orders. You see that? 62 orders.
Yes.
That's your answer. Right. That is the question on the economic order quantity. So it's 62 orders, then there is 653 units. So you are done with your question number 2. All right, guys. Any question? Any question? Any question on this? Right. So far, so good. So I'll stop sharing this. So those who joined us today, my name is Jasper. They call me the academic legend because I've been doing this for a long time and I just enjoy doing this. So if you need any personalized help, you can just inbox me. You know my number. I said the number that comes to me directly is 011 8457117. That's my number. It is also on WhatsApp. You can also WhatsApp me on 071 833 1711. Okay.
Wish you can do it for free every time, eh?
Yes.
Please repeat your 011.
011 845 7117. Then 071 833 1711. So, guys,
845-717.
Yes. That one comes to me
711.
directly. 011.
No, last 4 numbers, yes. 845.
Is there question 3 or yeah?
No.
There's no question 3 so in Essentia. It's only question 1 and 2.
So the final answer, do you write that all of those digits?
Yeah, you can write all those digits, then you round off to 62 orders.
Oh, okay.
Yes, you have to round off to 62 orders.
Thank
So guys, tell others to join in these lessons. I think for this week, we are done with the assignment, which was the pressing issue for this week. So going forward, I will see if I can slot in a lesson maybe on Sunday. Hello, Seth.
Chilufuno, sorry to disturb you. Is it possible for me to get yesterday's lecture? Or
Yes,
what do you
it's
call
there.
it, session?
It's there. It's posted in the group. Are you in the group?
Yeah, I've been in the group forever. Yesterday, remember, it was out. So I didn't really see what happened.
We also encourage you to join the Telegram one.
WhatsApp was out. Yes, I'll join. I just actually downloaded my Telegram like a couple of minutes back.
All right. So I'm going to I'm going to upload it now after this
Yeah,
lesson.
it's
Then I'm going to
in the group.
send you. There was someone who was speaking.
No, thanks a lot, Director. I appreciate it.
All right, guys. So I will see if I can slot in a lesson on Sunday, or if not on Sunday, it will be Monday, Tuesday. But going forward, we will just be doing past exam papers. We will be looking at questions that usually come in the exam. So just revising those things. But it means you should also have done those things. Right. Thank you, guys. I don't want to strain you.
Thank you, Jasper.
Thank you so
Okay.
much.
Thank
Thank
you,
you so
guys.
much.
Okay.